A paper on digital banks was published by the federal think tank NITI Aayog recently. The report offered a model for the licensing of digital banks in India. It was stated that India already had the necessary technology stack to support digital banks. Full-fledged banks, often known as DBs or digital banks, are allowed by the Banking Regulation Act to get a license. To what purpose are these new banks being established, and are we prepared to deal with their presence? Let us address these questions in this video. Unlike traditional banks, which require brick-and-mortar infrastructure or physical access points, digital banks simply leverage technology to provide banking services through mobile applications and internet-based platforms. DBs behave like any other scheduled commercial bank, accepting deposits, giving loans, etc. They will follow prudential and liquidity norms at par with the commercial banks. Globally, terms like digital banks, neobanks, challenger banks, and virtual banks are often used interchangeably. The Union Budget for FY23 proposed to establish digital banking units, DBUs, of scheduled commercial banks in 75 districts. The objective is to ensure that the benefits of digital payments, banking, and fintech innovations reach the grassroots. DBUs are treated as banking outlets, equivalent to a branch. These units do not have a legal personality and are not licensed under the Banking Regulation Act. Only existing commercial banks may establish DBUs. In contrast, digital banks will be licensed. These banks are expected to ensure credit penetration to underserved MSMEs and retail customers. Digital banks are expected to further innovation and support the underserved segments. However, some believe that it will only cater to customers with some level of comfort with digital transactions. According to them, RBI too is not comfortable with this model, as the central bank believes that cash handling and credit decisions require physical branches. In the first phase, a restricted digital bank license may be given, with limits in terms of volume or value of customers. In the second stage, the licensee will be put in a regulatory sandbox. Finally, a full-scale license may be granted contingent on satisfactory performance. A digital bank will be required to have initial capital of 20 crore rupees while in the regulatory sandbox. Upon progression from the sandbox, a full-stack digital business or consumer bank will be required to bring in 200 crore rupees capital. The UK has led the pack in terms of digital banks, with new entrants in the form of Monzo and Starling Bank. Several jurisdictions in the Southeast Asian region have witnessed the rise of digital banks. Hong Kong has issued separate licenses for virtual banks. As of May 2020, the Hong Kong Monetary Authority has licensed 8 entities out of 33 applications. In South Korea, Kakao Bank and K-Bank operate as internet banks licensed under the Banking Act. The Philippines has approved 6 licenses for digital banks.